Hi, Masterminds. Welcome to Monday Market Update. Markets are off and flying. 28,000 has been reclaimed. Does look like the debt ceiling to a large degree was priced in, but I still think that there is a point where we reach that markets price in the suck of liquidity out of the market. And that's probably when they release the news of they've released the news of the agreement, I guess, already. But when it actually happens, they're going to have to suck a lot of liquidity out of the system. And I think we could be seeing a bit of a euphoric movement. It's the 29th now, maybe into the beginning of June, until maybe there's more concrete information. And when the Treasury General account gets refilled, they're going to have to release a lot of bonds onto the market. There's a lot of capital that's going to flow from elsewhere into the Treasury market and away from risk markets, things like stocks, crypto, and whatnot. But the caveat to that is, and all year, is the markets are being tremendously irrational when you think about it, but also on the flip side, as Bitcoin has been following gold, the debasement narrative and the idea around a pause and a pivot where debasement's coming no matter what eventually, even with this short-term noise, debasement is coming, the currency is going to be devalued. So scarce assets like Bitcoin, like gold, like silver, like copper, things like that that are used and also considered stores of value are going to go up over time. So again, markets are highly efficient. They're trying to price a lot of this stuff in early. So, we've never really seen this dynamic where we have this 24/7 news cycle. Bitcoin and crypto have kind of brought it on as well, where it's, again, the market runs 24/7. Normal stocks and whatnot don't. There's futures markets, of course. You've also got those bank runs that have been happening, which weren't possible, even 10 years ago, because everyone's got a smartphone where they can immediately use Osco Pay ID. I'm not sure what they have in the United States, but it's similar. They can immediately move, millions of dollars from the account to another account and cause a bank run because of how quickly they can move this type of capital, even as a bunch of small deposits as well. If you've got, $100,000 and you quickly move it to another bank or move it out of a bank, if enough people do that in one hit, these banks can't sell treasuries quick enough because it's fractional reserve. They just don't have the backing in their accounts to pay out all these depositors. So we're in a new paradigm shift of a digital currency age, of speed, of velocity. And that's what these markets are really telling us at the moment, that we're just in this hyper dynamic stage where really anything could happen. That's my view. And, there's a non-zero possibility. We just see Bitcoin ramp here to new all-time highs. So that's absolutely a possibility based on the current environment. Still think that's unlikely, but you do have to keep that in mind because markets are going to price in this halving early, at some point. And if it's given the license to really thrill because of further debasement, and that's kind of what the debt ceiling is. It just is an indicator, and you have a look at the details of this debt ceiling raise, and because they've gone to Congress and the Senate and asked to have the debt ceiling raised, both sides have come to an agreement. This agreement effectively means after 2025 there are no caps on this anymore, and that's in the terms and conditions of what they're about to agree on. That after 2025, they're going to reduce spending by about 50 billion to 100 billion. It's nothing. But in 2 years' time, there are no caps. So they can go back to just printing and spending as much as possible, as much as they need after 25. This is a totally political settlement, in my view. It's just for the optics. It's to keep the lights on, to keep things running in the short term, sort of a move of necessity. But the partisan politics, they're all saying they're going to fight each other, and they come to an agreement at the last, second to avert disaster. So let's crack in. That's kind of my broad thoughts around what the market's doing at the moment. I'm going to show you a correlation that is just uncanny, which I think could give, again, Bitcoin a license to thrill back to 2021 all-time highs, or at least maybe up to 50,000, 40,000, like we've been thinking all year from the start of this year. Have that sort of move up, real heavy 2019 style move up, and then a real clip down based on something that comes along, regulation or whatnot, just a bit of a blow off exuberance. So I wanted to bring up Bitcoin's move here up through this descending triangle. We had the almost like that double bottom fake out, and it's easy to call now, but at the time I think we were really hesitant to get uber bearish if we were holding above 26,000 on a multiple close situation, daily, 4 hourly, all that. We just didn't want to get bearish because this is the 200-week moving average, and we have been underneath it, butting against it as resistance. It's the first time we've come back down and used it as support. We had a pretty clear indication here by bulls. Yep, not going to be accepted below. Perfect. Chop, 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 chop. A second retest down here, bought up by bulls. Yep, perfect. Chop, 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 chop. So, and then ramp up through this phase. So a lot of people are just getting chopped up. And again, derivatives, This is going to wreck bulls and bears. If you're short-term trading this sort of stuff, and especially on leverage, you're going to get absolutely wrecked. This is the time to really be positioning, look at your longer-term investment position versus, shorter-term trading. Unless you're experienced and you're using a, a small position sizing, maybe using some isolated on leverage as well. So you're not extending yourself. But just broadly, this is a really nice looking move in terms of bear exhaustion at this area. I mean, we've had two dips into that heavy liquidity zone of that 26,000, 25,000 area of that 200-week moving average. All the people wanting 12,000 were suddenly calling at this level for 22, 23. So you can see how the goalposts continue to move, just like on the downside, when we're at 15 or 17,000, everyone wants 15,000. When it actually gets there, they all move it down to 12,000. And it's psychology. It's just constantly thinking, feeling the fear, the gut punch when it gets there. You don't actually want to feel like you want to buy it when it hits those levels, but it's those points where you have that strategy, that plan, you action it, you take advantage, and then you reap the whirlwind on the upside, because 99% of people do not do that. They panic, fear, panic, sell. But then there's that flip side. If we had that invalidation level, that 26,000, if we saw two, I think we were saying the Mastermind group, if there were 2 4-hour closes, beneath 26,000, potentially a couple of 1-hour closes, if you're watching it really carefully, you just want to get in front of it. You just want to take risk off at that point, thinking that, all right, well, the market's clearly telling us the bulls aren't stepping in here. It wants to go lower beneath, a crucial pivot point in markets that have signaled these bull and bear cycles and marked the bear market floor all this time. And there's this other argument as well, and this is going to sound, bullish, but we've been, suppressed beneath that 200-week moving average for longer than we have in history. That is a really interesting look on the chart, especially if you're expecting this bounce back and how hard it could go. And the theory, it's like a beach ball being held underwater. It's beneath a massive, crucial, key long-term moving average that we've never gone beneath before. And you see the supply scarcity coming with the halving. You see exchange balances just dropping. You see wallets just climbing high. Everything's up and to the right, but price was just being ultimately suppressed. An overextension in the fear and gloom of FTX. That once we crack it, the upside here, it could be quite explosive, and you just have to have that on your radar. And it's still on Twitter, I'm seeing, accounts calling for, lower 20,000. Absolutely can still happen, but have a plan in case it doesn't work out. And if these crucial levels do not fail, then it is useless still being a bear, because you're on top of it, and the upside, you're really exposed to the upside. It's like getting bullish into resistance. It was like getting bullish into 30,000 without us clearing 31,000, 32,000 and using it as support on the upside, because that is a crucial moving average and key level. We could go into it as well. But just, you can think in those terms, we were kind of in no man's land, until we saw the break above 27,300 or a breach of 26,000. We were in no man's land. So until you get that confirmation on either way, you can start accumulating there, sure, or you can start betting that's going to go down, but you really got a low margin of error, in my view. So you really want to wait for those levels to be taken out. And that's how you can improve your efficiency as an investor and preserve your capital. Okay, broadly back to the charts. Love what I'm seeing. The 4-hour just got absolutely smoked, that 200 moving average. The volume floor support here got absolutely smoked as well. A rip right through it. So just love that. What we want to do here, the RSI looks pretty overextended on the 4-hour. I fully expect us to cool off. I want to come and see us. In fact, I see more than likely we come back and do this sort of movement down to the 4-hour, ground out, retest this volume area, and then we see continuation. Also depends on stocks a little bit here. Seems like a bit of an everything rally is brewing. On the back of a bit of AI movement as well. NVIDIA, Google, a lot of the big stocks are just roaring because of AI. So there's a lot of money that wants to move back in the market, and liquidity just wants to get pumping again, which is a bit contradictory to what I was saying before. But again, markets are trying to price everything in, and we've had this suppression stage, and stocks just generally, I'm going to go there now and just have a look. Stocks over the last 6 months have really been trying to, and this is a term you may or may not have heard, it's trying to climb a wall of worry, or it has been climbing a wall of worry. So on this entire move down in this massive correction, you could call it a bear market, sure, and I think it did fit the technical definition of a bear market in here as well. But since since about this point here, January, so around when Bitcoin started moving higher again, around about this point here, it has since been just climbing a wall of worry, moving back up to a liquidity zone up here, coming down, retesting this key moving averages, freaking everyone out with a bit of a dip below this trend line and that 200 liquidity zone, but ultimately got bought up here. And it since has just been climbing that wall of worry. Everyone's saying a massive crash is coming. It's happening. The macro is so bad, blah, blah, blah. Macro and everything happening was all in this area here. There is, the potential for a big drop coming soon. But again, everyone is so prepared for it. And, everyone kind of is relying on that Fed put. That if there's a big smash, the Fed's just going to step in and print a ton of money. So what happens? Well, the market doesn't actually crash because everyone's still buying the stocks thinking that it's going to be okay. So it's like a self-fulfilling prophecy. Now, what I want to check here, once this level, this is sort of chopping here, if I can ever get that out of my mouth, if this level here breaks, which it looks like it is, if you were to invert this chart, this would look like a descending wedge, and this looks pretty clear to me as it looks like an ascending triangle here that's breaking out. But if you were to flip this chart over, if you saw this breaking to the downside, you'd be like, oh, I'm shorting that, I'm getting out of here. It's going to maybe wait for a retest back on the support and then it starts to fly. So in my view, stocks have climbed a wall of worry and they are about to move higher. And this will just send a shockwave through bears right now because there are a ton of bears that are massively short on this market thinking that a big crash is coming and they're going to rip through here. That's if stocks continue to do what they're doing. But this looks incredibly bullish for stocks. We've still got a few things to wait on. It might be a weekly moving average above us. Let me just have a check. Oh boy. Okay, so we've cut through the 100-week moving average. Oh, this does not look good for bears at all. Of course, this can reverse. This see how this candles. I've just gone hollow candles, so I like the look of them a little bit better. This just tells me that this futures market's in play right now at this area here. I'd love to see us come back and retest the 100. I think we might as well, but seriously, this looks so bullish. It's not funny. So with stocks moving higher, a bit of an everything rally here. Gold going a bit sideways, but Bitcoin, risk assets just want to move higher. So the weekly 200, that all looks fine to me. Back to Bitcoin on the 4-hour. Let's just have a quick gander at the divergence, which I sort of made a bit of a deal about this morning. And it's just so important to have these simple ideas and simple strategies to add to your trading and your investment thesis around, when we see a reversal? When is there a pretty clear signal that it's looking like one side's getting exhausted and we might see the reverse happen? And that was and it's pretty obvious because this was just key support, 26,000, those 2 weeks right in there. Now, when it's not super obvious on a higher time, like 4-hour and daily, you can go down the 1 hour and give yourself a little bit more of a head start. But for mine, I'm just looking at this, seeing these 2 candles, one after the other, getting a bit deeper. And I just saw the RSI just gaining a bit of strength here on the side. And it's very, very minor. But at the time, you see this very deep cut. The second candle rips right down much, much lower than this previous one. It's just kind of going flat. It's a very minor divergence, and it may not even qualify as a divergence here. But to my eye, that starts to look very interesting because it's just not getting any deeper. And over here, you look on the left-hand side, we got lower on the RSI, but over here, we're reaching those same levels, but bulls are gaining strength compared to that last low. If we were to go down to the 1 hour, it was far, far more obvious. Where are we? Back here. So you can see the double candle there, one lower than the other. But on the RSI, it is super, super clear that the bulls are gaining momentum. So price dropping lower while bulls gaining strength. It's pretty clear divergence there that price is going to move higher. So all this movement after that, granted, there's been a bit of macro that's sort of helped this move higher, you could argue. But regardless, one divergence has given us and altcoins. From that moment, you identify those moments, you got a 10% move. Even, up here, that's a really nice move. Rebuy lower, go back higher. It sounds simple, and it's never that simple. But when you're looking at the charts, these are things that you can just put in your arsenal to go from there. All right, I wanted to bring up this chart here because again, I'm going to sound a bit more bullish in this episode because I think sometimes we just need to have a bit of recalibration when you're being a bit of a bear. I don't know, I was a bit of a short-term bear leading to the debt ceiling, and we still could see that turbulence over the next week or so, and then the Federal Reserve with their rate rise. But again, markets trying to price this stuff in, and Max Payne, I honestly think is to the upside just with how bearish everything is. That's just my current view. And again, these are just views on the fly. They're dynamic. They can change with what I'm seeing in the charts, what I'm seeing in the data, I'm seeing in the macro. And I was having a chat with someone on Twitter and also in the free Bitcoin group, and it's about the interest rate rises. Now, I'm being fairly confident over a longer period of time that we're going to see a pause, we're going to see a pivot relatively soon. That pause just hasn't come, and I've just been looking at the data going, this doesn't make sense. It should be here, the mean reversion, all that. And you know what? Sometimes you have to put your hand up and say, yeah, I get things wrong. But broadly, what I'm focused on versus these rate rises anymore, and I've been looking at this for more maybe a few months now, is just global liquidity. All these markets run on liquidity, and the Federal Reserve is really telegraphing their move. They're either going to, do another small rate rise, or they're going to pause. And then in due course, they are going to pivot, which increases more liquidity into the market. Again, markets are looking at this and understanding the logical progression of events. And ultimately, it doesn't matter whether they raise a little bit more or they pause, or what. All that matters is liquidity and the direction, the forward-looking direction of the market. So again, you could get hung up on the noise of, they're going to raise another 2.5%. So get ultra bearish. The markets have had like 6 to 8 months of this sort of dynamic. Eventually it breaks. Eventually we don't get concerned with these rate rises anymore, because we know it's got a very short finite lifespan, and it's going to turn very, very quickly. And liquidity is leaking into the market left, right, and center, because it just needs to keep the bond market together and just the whole system running. So that's just my views around that. And again, you're never going to be right 100% of the time, and you may have a deeper, nuanced thesis around this versus just a very black and white, see rate rise bad, no rate rise good sort of situation. These markets just surprise you time and time again. All right, I wanted to bring this up here because there is a deep correlation between NVIDIA and other graphics card chip manufacturers around the world and the price of Bitcoin. I'll leave it to you to guess why that is. No, I'm just going to tell you. It is the mining rigs that use the graphics cards in those mining machines. It just generally drives price higher. And what we've been seeing over time is Bitcoin and NVIDIA have been tightly linked. There are other companies which have even tighter correlations. There's an analyst called Caleb Franzen who actually pointed out another company, for the life of me, I can't remember who it was, and they had the tightest correlation I've seen, where the highs of Bitcoin, the highs of this company were in unison. The lows were in unison as well. And then it just continues like that. But MicroStrategy, NVIDIA here is absolutely stolen the headlines recently and just ramped through the roof. And where is Bitcoin? It's going sideways. It's doing the same sort of climb NVIDIA was doing before it absolutely climbed out the ceiling. Now we've got Bitcoin just ambling here on the 200-week moving average. So look at this over here. So this first sort of peak over here was a bit of an overextension for Bitcoin. Then NVIDIA completely followed it up here. So there is that dynamic. I'm not sure how pronounced it is. A lot of these big companies buy the graphics cards in advance and whatnot, but it's just crazy how these sort of run together. And then you'll get those MicroStrategies of the world running together, obviously, because they're holding Bitcoin. It's just a correlation. I wanted to bring everyone's attention that, the downside's been very well telegraphed in this. The upside now is moving much, much higher. Bitcoin hasn't moved yet. So has NVIDIA just flagged the start of the run there. All right, let's move on to, Optimism didn't quite load there. But Steve-O put on the radar this morning that Optimism is absolutely one to watch. In fact, let's do Optimism in a sec. I'll do Litecoin here. Watch Litecoin, absolutely still firming in this larger ascending triangle that we've been watching. RSI, starting to get pretty strong. This is a really good zone to be in. You want to be above that power zone, 69. I really think 100 is on the cards fairly soon. But in the short term, it's ripped through these moving averages, looks fantastic, running into an area of heavy liquidity above. Really want to see it twice above the 91, 92 area. We want to see it above 93, come back down, retest the top of this as support before that 100 move. But we're heading towards that halving, and 100 is going to be an absolute bitch to break. 200-week moving average. 200-week moving average? I think it's the 100. Let me just double check. No, I was wrong. 200-week moving average. So my chart's right. That here. So you can see here just wick, 200-week moving average, bang. And then you've got the 100 above it as well at 106. So there's going to be massive resistance above. But if I can crack these levels, she's off to the races. Now, let's have a quick look at Optimism. Where are we? Optimism. It just looks good to me. And Steve-O put on my radar this morning. It's got this event coming, which is its mainnet upgrade. So just pay attention to these events and these types of environments that can get very, very interesting fast. And look, it's now retesting, reclaimed a lot of these moving averages on the 4-hour starting to look okay. It's retesting the underside of this trend line. It's getting above volume. RSI looks fantastic. This is a reasonably good looking setup for a bit of a contrarian accumulation in this area. And then more conservative people will wait for the break and then the pullback and then, layer in here. But a move to, 1.8 is probably on the cards, if not higher, with this mainnet upgrade, if this all, loads up and, the daily looks fantastic as well. So, guys, hope you have enjoyed this episode. I've been giving you a couple of opportunities there. Watch this market. It's just looking like it's about to crank up. So happy days. Bitcoin, watch the top of this just for that break above. Now, where was it? The 4 hour, because 30,000 is absolutely back on the cards now. But we need to be wary that there is a moving average just above us. And I may have already covered this, guys. Sorry if I'm repeating myself. It's the daily 50 moving average here we're running into. Get above that, and then we're running back to the 30,000 high. So that's what I want to see. Daily looks fantastic. Let's go get it. All right, guys, have a great day. We'll see you again on Wednesday and Friday as well. Have a good one. Ta-bye.